Even after a U.S. debt default was averted, consumer and investor confidence continues to falter. The Dow Jones Industrial Average fell more than 500 points on Wednesday, marking the worst day on Wall Street in 3 years.
Well, people should be skittish. They, number one, sometimes feel that they aren't as informed as they need to be. I like to say there's nothing like a financial crisis to get everyone's attention.
In the 2 weeks before the August 2nd default deadline, business and banking leaders urged Washington to make a deal, or, quote, the consequences of inaction for our economy would be very grave, saying that in a letter signed by corporate CEOs including J.P. Morgan head Jamie Dimon and Goldman Sachs chief Lloyd Blankfein. But even with a debt ceiling raised and spending cuts agreed to, the anxiety spiral continues.
This is your world, and if ever we have a prime example of how global economics are connected, this is now. What happened in Europe yesterday was actually caused because people there are concerned about the debt ceiling that we were dancing on for so long.
The last time banking honchos were predicting calamity was in fact 3 years ago, when they themselves were asking for taxpayer money to save their companies. Some analysts believe that Washington was never the problem. It was always Wall Street.
The government has been propping up the market by printing money, giving it to the banks. The banks then took that money and bought bonds, bought stocks with it. See, the case was that way would lend it to the public, so the public would have consumer loans and they'd foster economic growth, but that wasn't the case at all.
Hardest hit in the economic roller coaster have been African American households. Unemployment in communities of color remains 3 times higher than the national average, coupled with reports that black families have lost 50% of their collective wealth during the recession. At a personal finance workshop in Philadelphia, many are not only looking to find ways to shield themselves from more damage, but to also find ways to recover savings for their future. Investors with lots of money have many options. The most popular right now appears to be buying gold. A rush on the precious metal has driven it to its highest cost in history. But for average Americans, the choices are much fewer. Some have to make tough basic choices like eating over paying their rent or their mortgage. So as bad as things got on Wall Street last week, many analysts predict that on Main Street, things will get a lot worse before they get better in the coming months. In Philadelphia, Gary Anthony Ramsey, Our News Now.